Interested in real estate? How about wealth? Well, they go hand in hand. And here, you'll learn all about it. Welcome to Be the Bank, a podcast where we discuss and debate the topics centered around real estate investing. Your host, Justin Bogard, shares insights into investing in real estate to create real wealth and passive income for you and your family. He'll share stories of real estate investments done right, walk you through the process of owning a real estate note, and most importantly, educate you so you can be the bank. This is Be the Bank, brought to you by American Note Buyers. Now, here's your host, Justin Bogard.
Welcome back to another episode of Be the Bank podcast. This is season number 5, episode number 17. Today, we are going to be discussing the Midwest job automation and also investors and their books. So stay tuned. Hello, Richard.
Justin, it's a nice summer day.
It is. I don't consider it summer right now because the girls are in school. Mm-hmm. So I know it's not fall, but I just don't consider it summer because it's like when school's out and then when school begins, that's like my summer time clock for me. Yeah.
So you guys have it all year round school?
We do not.
Okay.
That was talked about where we live here, close to Fishers, Indiana. And I guess I don't mind it. If that was the case, you'd have longer breaks throughout the year. But this isn't too bad. Now that my girls are older, my girls are both in intermediate and junior high right now. So they actually go to the same school building. They're just separated within the building. Mm-hmm. So the breaks that we have, I think we get 4 or 5 days on Thanksgiving break. We get 2 weeks, almost 2.5 weeks, I think, for Christmas break. Fall break, we get a week and a day. And spring break, we get a week and a day. And then summer is usually right about 8 weeks in the summer. So the other way around, we would get like basically 2 weeks during fall break and spring break, and extending, I think Christmas and Thanksgiving and stuff will be a little bit longer. But
from a learning point of view, I actually think the year round is better because I've had a number of teacher friends that tell me that they spend the first month of being back in school helping the students all remember what they forgot when they left.
Right. I can definitely see that happening. Yeah, we try to do a little bit of reading over the summer just to help, keep their mind a little bit sharp. But that didn't happen as much as I wanted to because I didn't press the issue too much. But yeah, the kids are doing good. We already had a Meet the Teacher night last night, and today, as we're recording this, we're doing another Meet the Teacher with my youngest one.
Good deal.
So that's always interesting. I got to actually walk the school for the 8 periods for the older one yesterday, last night, and they sat us down in each of her learning periods for about 6 to 7 minutes, and the bell would ring. Then we would have 5 minutes to walk to their next class. And my daughter's schedule, she's on one side of the building for the first period. The second and third period are on the opposite side of the building. And then the fourth period, she comes back to the other wing. And, and so she's bouncing back and forth. I'm like, my goodness, no wonder why you don't use your locker, because you don't have time to open your locker by the time you get over there.
Yeah, I remember those days. And I actually remember that being kind of fun. And in California, the school layout's quite different. In other words, it's a big flat 1-story building with open air hallways, as opposed to what you guys are used to there. And so same thing, you were kind of running from one class to the next in a lot of cases. So fun.
I'll be interested to see what the high school is like, because the high school is like 4 times bigger than where they're at now. So I heard other parents talk about it's so confusing that if they didn't have a map, they would get completely lost. So I can imagine the students struggle, at least the freshmen do the first year.
Yeah. Well, my high school had 2,500 kids. So a couple of days before school, I would hop on my bike and I would ride the hallways and ride from class to class to class. So I didn't get confused the first day. That seemed to help.
That's awesome. We did not have that in Indiana. We are all covered buildings, all indoors. So we could not even ride our bikes to school. Really, there's no place to park them. We had to get dropped off with the bus, or actually, I don't even know if they offered car rider situation when I was in elementary and middle school. I think it was bus only, unless you're able to drive yourself in high school. That was the only way, or get a ride for somebody in high school. Only way you can get to school. But nowadays it's different. You can car rider up to whatever age. So
I understand.
Anywho, so one of the things that I brought up, Richard, during the opening little package there was about investors in the books. And I bring this up because I had the luxury of diving into somebody's a sample of somebody's books recently that's a real estate investor, and they do really well with what they do. They buy homes, they fix and flip them, they wholesale houses, and they also do a little bit of seller financing too. And so one of the neat things I get to do is ask them, hey, show me some of the deals that you've done so I can value them for you, because they actually hired me to look at some of their deals and say, hey, what do you think this is worth? How does this transaction work? Et cetera, because they've only hold on to their paper. They've never actually sold the paper before. And so I get into it and I ask them for, some basic things. So we're looking at, how much did they pay for it? Did they get any debt to buy this property? And then when they turned around and resold it to a deserving buyer, how much down payment did they get? What were the terms and, things like that. So I gather up information and I look at the first deal and I see they get so much money in debt. So for round numbers purposes, Richard, we'll just say they got $50,000. I'll say $100,000 in debt. So they borrowed $100,000, the investor did, so they could buy this property, and they turned around, fixed it up, and they resold it. And let's say they resold it for a little bit more than that. And so by the time the borrower puts down the down payment and they start paying on their principal and interest balance, let's say over like 7 or 8 years, I noticed that the unpaid balance was about, let's just say, $65,000, $70,000, but yet they borrowed $100,000. So I'm looking at this going, okay, what's going on? And I figure out that the debt they borrowed was not an amortized loan. It was just a straight up interest only loan. So if you think of it like, because you're very knowledgeable in the hard money world, when you get the hard money loan, it's traditionally interest only, but it's also short term. So this is more a longer term interest only money loan. And so, Richard, as you know, and for our audience's benefit, if you get an interest only loan, that's great in the short term. But if you're getting that loan to buy something that's amortizing, meaning the principal balance is coming down every single time a payment's made, we're assuming it's monthly. Eventually, Richard, that balance gets below what you owe, and then you start becoming in the red on your books, right? Meaning a negative value. So if they owe 100 to their investor for this property, but yet their buyer only owes them $70,000, there's a negative $30,000 equity problem there, right, Richard?
Right.
So I was noticing this on several other of the deals that they've done like this as well. So it occurred to me, Richard, that it's apparent that they're probably not the only ones that do this. I think it's possibly an educational problem as far as understanding the financials of a business in general, and how to make one-to-one relationships work as far as in your accounting as it pertains to real estate investing. So you and I have done a lot of work on our books and to try to make them right, to understand them, because like I was saying with you offline, like I could show you one of our loans and I can say, Richard, here's the profit and loss statement. Here is the statement of cash flows. Here's the balance sheet for the actual, just the loan, the one loan that we're talking about. And you can see to the penny exactly how much money we have in the deal, or how much money we made on the deal, or how much money we have left to owe an investor on the deal. And you have all that information to the penny.
Right.
Now, what it would appear in the scenario that I'm talking about with the real estate investor, that they probably have enough money in other parts of their business to pay off this debt. So it's not really a problem to them. But as you look at the books, it doesn't make sense, right? The books are off balance, and you can't really see and look into the books and say, okay, how much, cash do I really need? How much cash am I getting? How much is going out? Because everything is just kind of weaving in and out like a big traffic jam.
Mhm.
And it doesn't make a lot of sense. So if they were to sell their business or they want to have somebody buy their business, it would be very confusing, I would think, right? To buy a business like that doesn't have their accounting all squared away.
It would be almost impossible to price it correctly. Yes.
Yeah. Yeah. So it also occurs to me, Richard, that since we have been so heavily vested for a while now in our books, as far as making things look correct and having the proper accounting, having a proper chart of accounts within our accounting, and then monitoring all of our expenses and our income and itemizing them properly in our books, that I don't see a lot of other businesses taking that as a priority.
Mhm.
And I would venture to say, Richard, that it's the most neglected part of probably anybody's business, especially real estate investors, it's got to be their accounting.
Yeah, which doesn't surprise me at all. I think there's a lot of entrepreneurs out there who are very good with a hammer, very good
Yeah.
at very good at finding deals, and saying, oh, "Okay, fine. I'm paying 100. I'm financing 50. I'm putting 25 into it. I sell it for 150. I've made money." But that's the extent of their accounting ability.
Yeah.
Um,
Yeah, it's kind of rudimentary. I hate to say it. I don't mean in a negative way, because we're all good at something in the business, and there's some things we're not good at. But I think
right.
if more people recognize the fact that you're more than likely not, your strong suit is probably not going to be financials, and we all can do math, right? We can run a calculator, but I'm talking about like actual accounting financials. It's different to run cash flows and stuff.
Right. So it strikes me though that um, it's fine if you just got one project going, but
Yeah,
if you're, say, a note investor and you're doing that, or a note seller and you're doing that, or anything of that sort, and you're basically carrying a negative on your book that doesn't exist, it enables you, no, it disables you from being able to um, do correct cash forecasts and actually
yeah.
know what you owe your investors and everything else. So I'm a little bit surprised that they're letting that happen.
Yeah, and like I said, perhaps it's not a big deal because they're like, okay, I've made this much money over here, so I could easily offset that. And maybe they're thinking in their mind, oh, I got it over here, I can offset it over there, no big deal. But when someone's like, a fractional CFO or a controller, and they're looking at it, they're going, oh no, oh
Yeah,
no, this is not going to work. Because when
that's
they're
a
running the
nightmare, right?
reporting, they want it to be clean, they want it to be
Yeah,
debits and credits, as one of my accountants used to say. And it makes sense, though. When you're trying to run a company, you want to look at your financials and really understand, to the penny, like what's going on. How much do I really have cash on hand today? I can go to a bank and figure that out, right, to our bank account. But
right.
really, we don't see what else are the expenses that are out there that haven't been paid yet because money hasn't been withdrawn. But yeah, so it's pretty interesting.
Hmm. Hmm. So what your message to the audience is: beware your books.
I would say if you don't feel comfortable, like you know what you're doing, then you definitely should raise your hand and ask for help. I wouldn't necessarily go to your tax CPA that does your tax accounting and have them run it. I would
Mhm.
actually use a different person or a different company to go through and do your business financial accounting,
Mhm.
because as one of our partners would say that helps us out with our accounting, there's tax accounting and then there's business accounting, and they're two
Right.
totally separate things. So if you have a tax accountant go through and do your books, you're not going to like what you see because it's not going to make any sense at all. Everything's not going to make sense. If you
Right.
have somebody does your business accounting, that's more like a controller or a CFO, they're really going to make sure that it understands to the business owner, like, okay, you bought your widget for this price, you resold it for this, your net profit is this minus whatever else is going on. It makes a world of difference. So we've had to change our books, I think, 3 times
Yeah.
since we've been doing this.
Right.
But I tell you what, it makes it a lot easier now with a fund, especially setting up a fund. It's really easy to go there and do the same thing. We can pull a loan that we have in the fund, and we can show you to the penny exactly what's going on with it.
Yeah. Yeah. Well, you're very good at setting all that up too. I mean,
Well, I've had a lot of help. It wasn't me with an epiphany that said, "Hey, this is how you do it." No, it was a lot of learning. I tell you that.
Yeah. Yeah. So I was going to say that when I first started American Note Capital, I quite quickly realized that I had to have an accountant do just that for me. And I'm same way. I can look at every deal I own. So here's my basis. Here's where I am. Blah, 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 because there's no way I could keep track of it. And you know what? You shouldn't. I mean, because you should be out making money. You should be out finding deals and buying notes and doing whatever. Yes, I'm probably spending $3,000 or $4,000 a year in accounting fees, but that is minimal compared to. I mean, I can do one deal and make more than that. So
exactly.
Plus, I'd probably screw it up.
That's right. Yeah. Yeah, a business owner can't be 100% perfect in every category they need to be perfect in to run the whole business. So you got to outsource the things that you're not good at, or the things that are just time wasters that aren't making you money. And that's what you have to realize. So luckily there's two of us in the business, so we can divide things up a little more easily than we can otherwise if we were just by ourselves. But
right.
So Richard, middle America and jobs. We mentioned this in the opener as well. So you had brought some light to some information before we even got on here and started recording, and I thought it was a good subject matter just to talk about. And so you want to go ahead and talk about some of these articles or stuff that you've been reading about?
Yeah, well, overall, it's sort of the long-term state of the job market, especially in the Midwest. It's affecting everywhere, but in the Midwest, where you, in a lot of cases, may not have quite so many job opportunities. A lot of people, I think, the common thought has been, offshoring has been the big boogeyman in terms of the reason we have sort of a slumping job market or job opportunities throughout the Midwest, right? But they've done a couple studies now, and they've shown that that's not actually the case. What is really causing a lot of that is automation. And they interviewed a bunch of people. For instance, they went to a fellow in Saginaw, Michigan, and General Motors has a very successful plant there. And their productivity has actually increased over the last 5 years. But what he said very clearly was, he said, look, we used to have 7,500 people assembling those cars, the same amount of cars 10 years ago. He said, now we have 500. And, they show you a picture of what the robots are doing, and you're kind of, I have no robotic background. I was amazed to see what these robots are picking up whole cars and turning them upside down and spray painting them in all different ways that, we wouldn't even think about and would not be humanly possible.
Yeah.
And they spit out a brand new car every 90 seconds, off this line. That's just one example. I think you and I talked about the last time you went to Mickey D's. How did you order your food?
Right. I was using the touch screen, right? It says pick up or carry out and go through the menu exactly what you want.
Right. And so what does that mean? That means that Mickey D's now has 4 or 6, fewer people that they have to have as cashiers that they're not paying. Well, a lot of those cashier's jobs, a lot of those attendant jobs are exactly what our borrowers are doing. That's how they're staying afloat. And we have to remember that the median income for the U.S. Within the last couple of years is only $33,000. That's not a lot by our standards, but there's a lot of people making that. So where does that go? What does that all say? It's just a little bit sobering. I don't think it's a red alarm or alert or anything like that. But it's to say that if you're buying notes in specific areas, your antenna might be just a little bit higher in terms of finding out what the job market is like, trying to determine, can a lot of those jobs be automated or not? Because if they haven't been, they are going to be. And as we talked about a little bit on the show earlier, AI is just going to speed that along. It's going to make it a lot faster. So anyway, it's just interesting to think about the overall job market, I think, throughout the Midwest.
Yeah, you brought up some pretty interesting points there, and the Mickey D scenario. I like how you posed that scenario, because I can imagine it, because I was there recently with the girls, and I dislike using the kiosk because, quite honestly, it takes so long for me to go through all the menus and the sub menus, and then you're trying to look for deals and nothing really makes sense. So I think it's harder for the user at first to do that until they get used to exactly where to go through the prompts.
Mm-hmm.
Now, there still are cashiers there. I'm not sure how often you've been to McDonald's, but there's still like 1 or 2 cashier stations, and somebody
Right.
can jump in there and do it. But you're right, there is no dedicated cashier that's sitting there that's taking your order. They
Right.
can do it, but they just don't have it. I think,
Right.
Richard, they've gotten smart to where they might be down maybe a couple employees, but I don't think they've gotten rid of everyone, because now the new trend is delivery service. So now they have order runners that are taking the orders and bringing it out to the customers that are at the tables, or bringing them out to
Ah,
the
that's
drive-through people,
interesting.
or bringing them
Right.
out to the people that are like DoorDash or the other services that do that. So they have balanced the fact that, yes, there is a little bit of job loss, but there's also new ways that they've made jobs because of these other things that we're talking about with automation. And then, with order accuracy now, even though I'll say every time I go to McDonald's, they still screw it up. And I tell them exactly what to do. I'm
Right.
thinking of Joe Pesci going through the drive-through in Lethal Weapon. And he
Right.
said, they beep you in the drive-through,
Right.
I just can't get that out of my head. It's so funny. But yeah, so I see a little bit of job loss, but I also see job regeneration
Mm-hmm.
as well
Mm-hmm.
from those businesses, knowing that there's skilled labor, and then there's what I'll call kind of unskilled labor. They haven't really been pushed to drive themselves to get specialized education, maybe in a certain skill. I don't mean to generalize that, but that's what I'm thinking, Richard, is that. And I think you even mentioned this offline. I don't mean to jump into your rebuttal on that, but you had brought up a good point to me offline and said the retraining for somebody after they lose, a job that they were accustomed to for many years, let's say 10, 15 plus. Maybe they're an assembly line worker at the certain factory, and they know exactly how to do a certain thing on a car that you and I don't know how to do, but that's what they did for all that time. And so now they have to retrain themselves to learn to get into a different industry or a different type of assembly line if that's what they want to do. And there is a time period to where it takes them a while to get up to speed for that. So there is I think you said 2 to 4 year time drag of when they can actually get up to, what industry standard is for that certain position.
Right. Because I mean, and so it's not just straight mechanics like auto manufacturing or tractors
That's
or
just the
anything like
easiest thing
that.
to
I mean,
think of, right? When you think of
yeah, yeah. I mean,
automation. Yeah,
when was the last time you called a bank or you called for any company,
that's a good point.
and you got a live body? I mean, no, you probably
No.
called, you talked to a computer. It says, do you want option 1, 2, 3, or 4, depending
Yeah.
on what you're calling for. Those jobs are gone. Those jobs are not
Yep.
coming back. And a lot of our borrowers were in those jobs. So what it all points to, and I think you had this point, it's a very good point, which is that America's going to have to step up and get more educated. A lot more people are going to have to go back to school and or stay in school longer or take school more seriously,
Yeah.
or whatever. But the overall education level is going to have to increase to stay ahead of the game.
Yeah. I mean, we look at other countries. I mean, you visit other countries way more often than I have, because I visit them 0. You visit them at least 1 more than that.
Right.
But I think you even pointed out in like the Asian culture, they take their schooling very seriously, and they are, at younger ages doing more complex, mathematics and language skills and scientific skills than we are in our country at those ages as well. And it just shows that, they're able to go leaps and bounds in certain fields of science and mathematics, more than the United States, because they started at a younger age and really ingrained in them like some more what we would call advanced academic skills at a way younger age.
Right. Yeah. So it's just interesting to see where it's going. I mean, that's where, I think that's where government really does need to step in. I'd like the government to, this is my personal bias, to step out of some things like, telling us what we should do with our bodies medically and things like that,
Right.
but step more into saying, all right, we see that there's this gap here. We're going to provide some funding to re-educate people. We're going to and do it on and honestly, whether you're red or blue, I don't think that should matter. That should go, oh, gee, we've got constituents here who need some help.
Yeah.
Let's help them out.
I like that. Don't just give someone fish, teach them how to fish.
Yeah, exactly. That's where it needs to go. And so hopefully Congress and the government will get around to doing just that.
All right, everyone. That was episode number 17 on season 5 of Be the Bank broadcast. Don't forget to check out our video feed of this on our YouTube channel, the American Note Buyers YouTube channel, and we also have the broadcast that we do monthly, videotaped and recorded on there as well, along with other myriad of different videos and training, educational type of stuff for you. So I'm Justin Bogard. This is my friend and co-founder of American Note Buyers, Richard Thornton, and we will see you guys on the next episode. See ya.
Sounds good. Bye-bye, everybody.
Thanks for listening to Be the Bank. We hope you learned something from today's show. If you enjoyed this episode, please rate and review us. Plus, check out our channel on YouTube and follow us on Facebook and Twitter at Be the Bank and on Instagram at Be the Bank Podcast. Be the Bank is sponsored by American Note Buyers. Thanks again for listening.